Welcome to another video from 144 Analytics on the Fibonacci retracements and how to use them. Today's video is going to take a look at some things that happen when you hit 38% and they go on to make new highs or lows, but only slightly lower lows or higher highs, and what to be looking for from that. We'd also like you to go back over all of our other videos. We've got about 6 of them now. Each one of these videos still has very good information in it in just how to use the Fibonacci retracements in all different settings, whether it's how to go about trading around a 61.8 range or 78.6. There is actionable information in these videos, which will come at the end, and those are time sensitive, but all the preceding information in what leads up to those points is still relevant and something you can learn from. So we're going to start here with one going back into, let's see here, this high in September of 2018. Now, this move here hits 78.6% back to the 2006 high. Now, the rules normally stipulates that 78.6 should send you 78.6 the other way, and that would have been all the way down at 860. But as always, we are going to watch every retracement on the way down. So we take a look at this and we come back here and we come and we hit 38% perfectly and rally, but where do we go but 38% right back up. So here's another thing to keep an eye on. Whenever 38 of a bigger move gets stopped by 38 of a much smaller move, you know the market is negative and or weak in this case. Plus, we already know that 78.6 should be sending us down here. Again, we're going to keep our eye on all the retracements, and as we come back here, this rally up here, 38.2. Another thing to keep in mind about this is we can always see one close above it or below it, but it's always that secondary close that becomes more important than anything. So in this case, we end up taking out, we close up above 38%. Next day, we're right back below it. And ideally, we should be going for new lows. So this is the thing that I want to point out that's also very important. When we did make the new low, but you see what happened here is a slightly lower low and right back up above the previous low. Now you're going to see this again in other things, but the key is that if it's really just going to turn like that, it should be just what you're seeing here. A plunge under it and then right back above it. And that's what happened here, and this should tell us we should go back to at least 61.8 the other way. Now we're going to move on here and watch this move. So if we take these retracements here, we can see that 38% as this thing made the new highs, went under. Again, look at how it went under, never closed under it here, came right back up to it, keeping the market extremely strong. We're just looking for higher prices. Couldn't even get to 38, played a lot on the 23.6%. And then we get all the way back to here. Now, here's going to be 2 examples right in a row. We come right down to 38% of this move here, which should tell us we should be going for new highs. And we do. But again, just as we saw down here with this spike, it made the new high slightly, got back into the range. Ideally, we are looking for 61.8 because we already reacted from 38.2. But we never forget about all the retracements. So we watch them all. And again, here, you trade under this. You made a slightly lower low and then right back up above the range. Again, these are the things you want to see. These spikes. You don't want to see, 4, 5, 10 days below that level and then get back above it, because the odds are that that one's not working the way you think it is. So we move on here, and as we keep going higher from this 38.2, we made new highs, and now you can start doing all your retracements from here up to here, on this leg, and up to here, but we're going to stick with the big ones. And in this case, we end up going, let's take that one out of here. Delete that. Okay, so now when we have this whole move going here, we had March of last year where everything was falling apart, and the market came down all the way to 38.2 to the 2015 low. Once again, you see how perfectly it held there. Traded a little bit below it. Actually, I should have been there. And right back above it, and on we go. It took a long time for this to go on to new highs, but this is what can happen when you hit some big retracement like this and don't make those new highs. You can get very choppy trade for a while. So as we move on from there, we look at where we are actually almost today, and 38.2% of just this low, which was 38.2% to the 2015 low, again 38% held above it, and then we just made new lows. Now this retracement goes all the way back to 2016, and you can see not only were we 38 back to this low right here, but all the way back to the low in 2015. And that's so, it's critical to know where those longer term levels are. You can always try and tighten things up, but don't forget where the bigger levels are before, because you don't want to be retracing here to here and then go, wow, it took out 38, it's no good, when the bigger picture hasn't changed at all. So this takes us right to where we are today, and the actionable bit of this is that, as you can see, this most direct move up, 38% or 23% in a really strong market, that's what you're going to hold, was the 85 area, let's call it. So this is what is key, and we should be going for new highs from here. If 85 gets taken out, you have another combination area down here at between 76 and 76, 75, where again you're 38 back to the 2020 low, and you're 23.6% back to the 2015 low. Now this would be even more important, but an aggressive buy would be here at 23%. But when these markets get moving, and you're seeing it, I mean, we've been in this bull market for a long time now, they just keep only going back to 23%. You don't have to risk everything on it. You can see how well they have hit these levels. I hope I've explained it enough that you can see how perfectly this stuff does work. And even with some of the incidences that you can go below these levels, you can even have one close below it, but that next day's got to be right back above or below, depending on the trend's direction. Now, we also have on our blog all the rules and guidelines and a lot of examples of the same thing. So take a look at that. It's a great source for information on the Fibonacci retracements. Please watch all of our other videos. Please give us a thumbs up and subscribe. We'd really appreciate that. And until the next video, good trading.